I believe the fourth quarter will be positive for individual investors. And I believe that this whole notion of seasonality and central banks stopping the interest rate hiking cycle will kind of coincide together. So first, interest rate hiking cycle. I think that even if we do see another rate hike in the US, I think they're one and done. I'm hopeful that the Bank of Canada will not raise again. But again, if they were to raise rates, I'm hopeful that again, it will be a one and done, let's say at the end of October. So if that is true, and if the interest rate hiking cycle is coming to an end, I think this market will start to gain traction. I think it's going to gain traction in, as I just said in my previous segment, some of the interest rate sensitive sectors of the market. I think bank stocks will do better going forward, even though interest rates may start to come down a little bit. But I think this getting through the hiking cycle is extremely important for us to understand where is the end point. I think when we have some certainty, that's when markets are happy and are excited. The other thing is the seasonal factor. And I have a chart here which clearly illustrates the seasonality effect. We know that the market has its best years at the end. The market has its best months at the end of the year. And we also know that August and September tend to be not the greatest. And this chart shows it. You can see here at the start of the year, markets rise. By mid-year, they kind of flatten up. And you can see here, September, they start to pull back. And that seems to be a seasonal pattern. But if you notice, November, December, they move significantly higher once again. And the steepness of that curve is actually quite nice, a lot steeper than what it was at the start of the year. So this clearly shows that historically, markets outperform in the fourth quarter. As we always say, the period between October and May outperforms the period between May and October. You know, all that sell in May and go away stuff. Well, that's where it comes from, the seasonal effect of the market. So I think this fourth quarter will be positive. I think the stock market is waiting just to get through the month of September. If we can get through September even or roughly at the break-even mark, either slightly up or slightly down, I think that'll be a win for the markets. I think we're going to see central banks stopping the interest rate hiking cycle sometime in the fourth quarter, and that seasonal effect will kick in. And I think the fourth quarter is looking pretty good for individual investors.